Hi, here we are in the Silicon Valley of India, Bangalore. We're going to talk to two finance personas who are coming from slightly new age businesses. Quick commerce, e-commerce, digital commerce. That's the kind of companies that we're talking to. We're talking to Nishit Mehta, who heads Flipkart's digital transformation initiatives and who also drives revenue controllership function, and Manish Bajoria, who's the CFO of BigBasket. It's going to be an interesting conversation. New age companies, new technologies, new finance perspectives, and I'm sure we're going to have a lot of learnings away from this episode. So let's get on with the show. Hi, morning Manish, morning Nishit. Thanks for
Morning,
making
Kaushik.
it. If we can just start off with a bit of an introduction, for yourself, giving a personal narrative, and in that personal narrative, if you can give our viewers any one or two pivotal moments that you've gone through in order for you to be where you are today. That could be a kind of a very personal takeaway or insight that we can possibly take as a learning from your lived experience per se. So if any one of you can go with a round of introduction with this kind of a pivot that you've gone through, it would be great. Manish, you want to go first? Yeah.
So hi everybody. This is Manish Bajoria. Currently working in BigBasket as their CFO. Joined them around 9 months back. Father of two kids, one teenager, 16-year-old, one 10-year-old. Been in Bangalore for now almost 11 years. Before BigBasket, I was with Vinny and I was with Amazon for around 9 years. And before that, I was with Levers. Spent around 9 years with Levers as well. In terms of something which really I think it helped me change was when I started my career with Tata Steel, worked in accounting for 2 years, and then when I moved to Levers, that was it was a normal job change, but I think the way Levers actually throw you into different types of businesses was a very different change, and I think that 8 years they made me do 5-6 stints in various different kinds of businesses. I think that was a very pivotal change for me because like I kind of moved from CA and accounting world to a business world, and that too very diverse business. I was at a point of time heading the finance for South region for Levers. At some point of time I was heading exports finance. Then they threw me in treasury. I was managing global treasury. So I think that kind of experience really changed my world from a CA and accounting only point of view to how business works and how finance works with business. So that was one big change, I think, which helped me work a lot more closely with business. And then I moved to Amazon in 2014. And that was again a big pivot because while Levers was great, Amazon was again one of those companies which is an institution which actually teaches you how finance can work in a very different way than what a traditional companies works. And it still works. So my initial thought was maybe this doesn't work, like right. How can finance work like this? But then like it works, and that's again like how data and how systems and how process and how technology and things work, and how finance can actually play a very different role while not controlling every number directly, but like managing the process and systems. So to me, that was again a big transformation for me individually in terms of understanding and adopting to the new world. And I would say the third was when I moved from Amazon and I took a break and then I joined an Indian company. And the way a Indian entrepreneur works, and I had an opportunity to work with somebody who is a serial entrepreneur, Gujarati serial entrepreneur. And like he used to pride himself by saying Lala ke saath kaam karo. And I think that was again a moment of change for me because how an Indian entrepreneur thinks, how they make things simple, and like how they see the world is a very different pivot. So to me, these are three things which I would say has really helped me change my view of the world and how finance works. And I am really grateful that I got an opportunity to work on some of them.
Great. So before Nishit, you start, I just have one question, Manish. So interestingly, like you said, you started with Tata Steel. I'm sure as an aspirant, as a young accountant out there wanting to take on the world, you walked into Tata Steel in a certain way, and then very beautifully you have this metamorphosis saying from accounting, it's not about numbers, it's about business and business partnering. How did you go through that mindset shift? Was it forced because your context was forcing you, or the reason I'm asking this is for young finance professionals who are probably looking to enter this domain. They might be having a similar mindset like you probably had when you walked into the corporate world, but this metamorphosis that you've gone through in terms of being closer to business, being a business partner kind of a person than actually being a number or a controls or compliance kind of a person. What was that? How was that mindset shift for you personally, per se?
So
If you
it
could
was
give, yeah.
sure. So it was not easy, and it doesn't come naturally. Like as CAs, we are trained to be somebody who's auditing, somebody who understand numbers, somebody who has a good control on numbers, and like that's how we are trained, and that's what probably we think at that point of time is the most important thing to do. And it still is. It's still the bread and butter, right? If you don't get the numbers right, no partnering works. So if you get the bread and butter right, then the question is how do you add value? And I think that is what levers as an institution has taught me in terms of, because they throw you along with the business and then they make you co-own the business. So it's not that you are just a numbers guy and you just have to report numbers. You are part of the business. You have a kind of a dotted relationship with the business, and then the business's goals are your goals, right? With a hat of finance, you work with them. I think that piece really helps you understand the business nuance. And one thing, like one of my earlier bosses told me, and it stuck with me, like nobody wakes up in the morning to do anything bad for the business, right? So everybody has the right intention. It's just that they have a very different perspective. And if you need to do well, you need to understand their perspective. You don't need to adopt everything, but you need to understand where they are coming from, and that really helps you.
Got it.
So that helped.
Okay, great. That's a great insight, because I think that's more of a reality check that young finance professionals should be ready for, right? And I think it's a trial by fire in your Unilever. It is the way you're sounding it. So, yes, Nishit, please, over to you.
Hey, good morning. Thanks for this opportunity. I'm Nishit Mehta, a Gujarati from Chennai. So, like Manish said, brought up in a Lala culture. I have two kids, a teenager and a 6-year-old. So I've been in Bangalore for the last 20 years. Moved for my jobs. First job was Wipro. So there've been multiple pivotal points, but just to tell you, it's been 9 years now with Flipkart. I was with a startup which is the first unicorn of the country in Mobi. And prior to that, I was with IT companies and a brief period with a British manufacturing company. So I'll tell you about my experience. I think right from my campus interview to when I started my career at Wipro, the culture at Wipro was more business led for finance professionals in a business finance role. So I think to what Manish said resonated with me quite a lot, because Wipro has this habit that if the finance guys are not only responsible for the P&L of the company, but they're also responsible as to why growth did not happen. So we've probably been trained, to own the business and be co-pilots from the very beginning rather than just be gatekeepers. If we lose a deal, we were equally responsible and just not the business guys. So I think that was the first pivotal point. The second was within Wipro, when the Lehman incident happened, I think it was a big shake-up for the entire industry. So one of the things where, you start working on how to structurally have a business running in a way that, such disruptions do not impact you. I think that was a great learning. I got to work on how operational stability needs to be done in an organization quite early in my, experience. So those early days were really transformative for me. The second pivotal moment was for me to even take up a job at a startup, which was in Mobi. I think I just had a 1-year-old daughter. For me to shift to a startup, not knowing what happens, etc. So I think it was like a very big decision for me to move into the startup world. But I think I definitely, even going back in hindsight, I think I'm very happy I made that decision. One of the good things about InMobi and the second pivotal point for me was here finance was looked at, obviously in the initial times, finance was second priority, growth was first priority. That's how the entire startup ecosystem worked. But when, we had conversations with our leaders, one of the things that the leaders wanted, which I think were not understood, let's say, well by most finance people, was, I want finance to work beautifully, but without disrupting experience and culture. So I think, how do you reduce cost without causing pain? Penny wise, pound foolish. In reality, in practicality, I was forced to think about putting policies versus building partnerships to drive, cost efficiencies, driving PNL. I think that was a very, very big pivotal point for me, because finance guys are not used to working, you know, in a way where experience and culture is not impacted. We are trained to put in process policies that create friction points, because of which we drive PNL, etc. While we partner with business, but things like, how can travel costs be reduced? Typically, you will see companies saying that you need to book your tickets 15 days in advance, 30 days in advance. None of that. How can you get out of all of that and build culturally a way where people think about cost as owners of the company rather than this? That was the second pivotal point for me. Third was, joining Flipkart. It's been 8.5 years now. My first B2C was with B2B companies all through my career. While I worked in startups, the agility, the kind of, we work 24/7, we serve customers 24/7. So there was this constant thought of what needs to be done next. So how do you process a B2C, way of working was my first. As soon as I joined, the Walmart transaction was to be done. So that kind of, was a very big moment for all of us at the organization. But I think for me, more so because I was just 20 days into the organization when I started working on the entire transaction. Rest was, I think, every 2 years I've had a role change. The most pivotal point for me after, various moments in the entire B2C ecosystem was taking over controllership. This was my first ever, controllership role. And I think Flipkart trusting a guy who's done only business finance, FP&A, to even, handle controllership was a very, very big moment for me. So I think that plus then leading transformation for an organization of this scale, I think, rocking my boat has always been
The norm.
the norm, and it has been for the last 9 years at Flipkart, or 8.5 years at Flipkart. So I think this has been how my journey has been.
Great. And just to take off on that, I'm curious on the last bit, right? Where typically you've been a very business partner heavy oriented kind of a mindset, and in the last couple of years, this shift towards controllership and transformation, right? According to you, what were those mindset changes that you had to bring in? The lens has changed a lot, right? From a business finance to that of a controller and transformation. And you're right in the hot inflection point of technology creating disruptions in the accounting and finance world, finally, right? So what were the key mindset shifts that you had to consciously be aware of and bring as a process to this new persona that you've taken?
I think first things first is, when you're partnering with business, right? You're trying to, in addition to doing various other things, you're also bridging logistical gaps, or like we call jugaad, right? How do you move from a jugaad mindset, to a proper operational control process mindset? I think that shift has been very massive, and I think it's still happening because, I can't take away
Unlearn,
18.5 years and unlearn it overnight. So I think that's been the, first largest mindset shift. Looking at systems and process ways of thinking versus just, how business functions, because in business, right, you have a certain idea, you want to take it to growth, you operate in a certain way, versus now when someone wants to start a new business, forcing them to think of systems first, process first, and then moving and starting a new business. I think that is a big mindset shift for me. And third, while I've always been in technology companies in my early years, transformation has been a thought process which I think imbibed in me from the early years. Bringing that at this stage of the company, and thinking, from scratch, and while doing so, AI becoming big, and trying and looking at how you can now stitch in the new technological changes in addition to what you were already thinking,
True.
and stitching up all of them together, I think has been quite a challenge. So for me, I think these are the three things which I feel are quite different from what I used to do earlier.
Great. This next question will probably to both of you in some sense, right? See, from a layman's terms, from an outside view, one way to look at e-commerce companies, at a lot of levels, it's easy to perceive e-commerce companies as growth companies, right? But very crudely put across, right? Not getting into the granular nuances of it. More growth, more cities, more expansion, more supply chain, more network, more warehousing, more logistics, etc. Right? But if I were to ask you, given that you have been behind the scenes and you have been thickly embedded in the actioning of all of this, how much of business is actually also being shaped by finance decisions of finance leaders? What is the impact that finance is able to leave on these kind of businesses, especially when there's so much of impetus given to growth, expansion, etc.? Like a few examples, I'm sure you guys have lens on incentives, vendor allowances. At scale, all of these bring in a huge amount of complexities, negotiations, etc., right? As a layman outside, a person is not ever going to get insights or views into these tough transactions, if I were to say, right? It's not easy to negotiate with vendors, I'm sure of that, right? So how much of an impact is finance as a function leaving on the business, to each of you on your own personal experience? Any one of you can go first. Maybe Nishit can.
I think from the very beginning, right, if you have to look at any company from the inside, you split the business into two parts. The business you've always been doing, and newer businesses you want to step into, like your quick commerce has become the new favorite.
True.
So how do you look at, and finance has always been someone who has not been, again, someone who's been the gatekeeper, but a copilot. I think from the very beginning, since I joined Flipkart, the conversations has not been about how growth can be achieved, but what growth is to be invested on. So I think, when I look at the business, I split that entire business into two parts. First is what I've been doing long enough in the e-commerce space, and second is newer businesses. And the classic example is quick commerce.
Yes.
Right? So the way finance has always partnered in Flipkart is not to be gatekeepers but co-pilots. In that, the conversations are not about how we can bring growth, but the conversation is what is the growth that can be funded, which will then yield for better profit and loss later. So where to invest, which will give us the right set of growth rather than any growth.
Got it.
That's the first conversation. Second conversation is about how one can think of, building my, businesses the way we have been doing it in a profitable manner. How do you invest in, let's say if I have to invest in faster delivery, does that pin code give me the right set of unit economics at a certain scale? Then I would go about it.
Got it.
Otherwise, I would not. So I would be investing in it, but only on a temporary basis. But the overall conversations on any investment, be it on logistics, be it on marketing, be it on starting a new vertical, everything is about not just growth, but it's about also doing it with the right set of unit economics. Certain bets can succeed, certain bets cannot succeed, but the idea behind all of that is to ensure that at a certain scale and above, they start becoming profitable.
Got it.
So I think that's the way we are thinking about it. And with various technological changes, how can technology be the backbone of all of
The
this
lever.
growth, right?
Yeah.
As a lever, affordability matrices, all of those. So these are all levers, and how those levers can then enable this business to even grow faster is another angle which has been looked at.
Got it. So Manish, maybe even you can kind of, give your views on how finance has played a role. And also, when you walk into a business war room meeting, right, and you're the finance personas walking into that room, what has been the kind of, cooperation that you've got? Because sometimes finance has this angle, or sometimes our reputation precedes us into the room saying, okay, finance, these guys are going to say risk, what could go wrong. Some of us can still carry those perspectives. So what has been your experience?
So I'll split the answer into two parts. The first part, I think, to me, the biggest job of business or finance is actually allocating capital, right? Because capital is always scarce. Whichever business, I've been like billion-dollar businesses of Amazon or Levers or smaller businesses, every business has a finite capital. The amount could be different, but there is a finite capital. And the whole job is how do you allocate it in a right way, which helps you grow and grow sustainably, so that you in future you don't need to allocate further capital into that business. And I think the role of business along with finance is the same. And I guess finance probably helps you or helps the business see that this allocation probably will be helpful for them in future, and things like that. So to me, the decision making of how do you help them allocate capital in a right way in terms of prioritizing what will help and how it will help achieve both growth and sustainability. See, end of the day, you can grow, but if you don't grow sustainably, you'll keep needing capital more and more. And at some point of time, irrespective of the size of the company, it will have to ask questions on whether it works or not. So I think the finance angle comes in those decision making meeting in terms of helping them think through that this is where it can lead, and helping them see a future, maybe build a model, maybe bring out some perspective from what external world has done and things like that, and collectively take a decision that maybe allocating capital here versus there probably will help or not. So that's how I see a role of finance in terms of helping them decide on those things. Coming to your second question, to an extent, it is okay to have finance have that perspective. So people should understand that. What people should not understand is probably that these are no guys, right? That is wrong. But at the same time, it's okay to think that there is somebody who would also bring out risk, as long as the common understanding is everybody is trying to do well for the business, right? There's no polish. It is more about probably there is somebody who has a finance head who probably understand what the investors are seeking for, and probably brings a balanced perspective, because at times the business head would be a little more biased towards growth because that's the immediate one. They have enough and more things to solve for. So a finance probably balances it, is how I see it. And together, both of them, if partners well, it kind of brings both the view that yes, this is the growth perspective, this is what it is, and this is the risk perspective. And together, collectively, you take a call. At times you agree, at times you disagree, right? But you have to agree to disagree. So that's how it works. And that's what I've seen, that across businesses, it's always like that. Not every time people will agree with you. Not every time you need to agree with them. And it's okay to disagree to agree. Right?
Got it.
And I think just to add, very well said, how finance guys start owning business and growth, and how business guys are also looking at risk is the perfect balance, I would say. And that is what this partnership over a period of time brings in.
Okay. A natural confluence of ideas. So Manish, to you specifically on e-commerce, quick commerce, complex operating environment, thin margins, volatile demand, constant pricing changes, vendor financing, etc. I mean, I think I can keep telling, the list keeps going on. I'm sure it's applicable for you as well in a lot of ways. But how are you looking at finance function evolve in e-commerce companies? Do you see that impact of technology coming in and starting to bring in efficiencies for you? Or another example is, do you think finance guys will become more data driven people, right? Trying to serve valuable insights to the business per se, and slightly moving away from the debits and credits of the world, which probably still in a lot of ways archaic in a lot of sense, right? Not really adding value, great for record keeping, but not really value additive in that sense. So what has been your experience so far in seeing that evolution? Has that started? Where is it? What do you think? How has it been for you?
Sure. I'll probably correct it, or maybe I a little disagree with you that I don't think debit credit will ever get anarchic.
Agree to disagree.
Because end of the day, that's the record,
True,
right?
true.
And it's important to have a reality check. So to me, that is very, very important. To me, for any finance person, that's the bread and butter.
Got it.
If you don't have your numbers right, you don't have a place on the table. So to me, that's very, very important that you have to have that right. You can be efficient in terms of how you record. You can be efficient in terms of how you report. But you cannot live without that. So to me, that is not going away, right? So that's one part. Now, second part on the data part, to me at least, and this is part of the pivot which I was talking about at Amazon, and I'm not saying in any bad way, in levers, we used to control a lot of things as finance, right? Who will do the pricing, finance has to approve, the reports will go from finance team, the MIS team will report to us. Amazon taught me that data has to be democratized. You do not need any control on data. Everybody should have the right, same access to data as you, so that everybody is able to see that and take a decision. The way the decisions to be taken should be guided by tenets. So we should have some tenets that we will do this, but we'll never do this, or we can take this risk, but we'll never take this risk. And as long as everybody acts as the owner, so data should be democratized. Everybody should have data. Tenets should be clear that this is what we want to do, this is what we'll never do. And then if people act as owners, somebody brings a little more business view, somebody brings a little more risk and finance view, and together you take decisions. So to me, while AI and the new technologies probably will help, it doesn't change the nature of the business. To me, the nature of relationship. To me, this is what I have seen we practicing at Amazon. Right from 2014 to 2022 till I was there, I'm sure they're still practicing that. So data was democratized. We will all get the data together. We'll have our view, they will have our view, and we will discuss it together. And at any point of a time when there is a conflict, we go back to a tenet that, this is what we agreed, that this is something we will never do, or this is something, if there's a choice, we will always go with this. Like Amazon has a tenet that between, while all things okay, we will always prioritize cash flow over profits, right? So if there is a conflict, we will go with that.
Got it.
So I think working on the right tenets, and then data is democratized and you take it together, so works. The new technology probably helps us get better, helps us get a lot more efficient, solves a lot of problems, and we can talk about it. Like in Q-commerce, I can see a lot of application which we can do. So it really makes things efficient. But to me, the nature of decision making doesn't change in its basic nature.
Got it.
It becomes easier because a lot of things are now easily available, but that basic nature doesn't change is how I see it.
Got it.
I don't know if it helps you.
No, I'll probably give my perspective a little differently maybe later. But Nishit, coming to you, given at the inflection point that you are in, more often than not, you assume e-commerce companies have abundance of data. And that's a layman's perspective of, abundance of data. But abundance of data, I'm sure, has its own problems, right? Business owners being data territorial, like Manish said, right? Data not being democratized, or even something as simple as data being unstructured across different places, right? Bringing it to a, sane structure for you to start drawing insights on or deriving insights on in itself could be a challenge. So from your perspective, what are the biggest challenges that you see? If, I'm sure you resonate with data being the new oil, which has been kind of laid out to us as a tenet, from a finance standpoint. So how do you see managing this churn, and how do you see finance personas, evolve to be able to continue managing this churn and continue looking at it from that perspective?
See, while I agree with what Manish said in terms of data democracy, and that's very important, I'll bring you a different perspective, given now I'm in the controllership side, that, how the business data versus the finance data has certain, areas and which need to be deeper looked at. So typically I would want to kind of categorize this into three parts. One is definitional inconsistency. Things like what is the revenue as per the business team versus what finance report sometimes has timing differences, because finance looks at it as delivered versus dispatched, etc. in an e-commerce world. So that is one part of it. Then there is latency asymmetry, because you have an order management system, you have a payment gateway system, you have a warehouse management system. All of these systems need to talk together and give you the same data.
True.
At the same point in time, and you always have latencies. So that is one. Third category I would say is lineage opacity. A lot of times business guys tell you that, I feel this number is wrong.
Okay.
But if someone has to trace it back as to why it is wrong, it's not that easy because of the multiple systems. The way I feel, finance, and both on the business side as well as people on the controllership side, need to now look at data is just not by writing a BRD and saying this is what I want. But I think finance needs to be a partner from a technology perspective to actually define how a data lake needs to be created, so that you have consistency in the way data is looked at by both business as well as finance. And when I say finance, I mean more from an accounting perspective, because to what Manish said, right, like debit, credit, the way we are performing, the what keeps us all honest is finally the numbers which we
True.
report in the P&L. So I think this is why this is becoming a very critical thing for companies which have so much data and what needs to be done with that data.
Got it. See, one of the reason I asked this question also was there are two parts to it the way we are seeing it. One is debit credit as a state of record is there to stay, right? We do need a base record to even start with from, recording our transactions per se. But the way finance professionals probably looking, I think till about 5 years back, I'll say finance professionals were largely caught in that world still, either as an auditor or as an accountant or as a controller. We were still kind of caught up in that process a lot. And I think in the last 5 years, you're seeing most of the finance personas, at least middle management and above, are starting to talk more business, starting to support more business per se, right? So, and with the advent of AI and technology, this process is just getting accelerated. I was just talking to Nishit before this episode. Some of the people at Consarc also, so in Consarc, the hardcore development team is in-house, and actually the application is developed by accountants, right? It's coded by accountants, right? 4 years back, 5 years back, it would have been very, very rare. Now it's not as rare, right? So we are seeing the next generation of talent that's coming through, having a more lateral, thinking kind of a point of view. In fact, they get a bit bored if you're kind of saying it's debit, credit, audit, control, etc. It's not exciting and value additive for them in a lot of ways. So I think looking at technologies to manage debit, credit, but looking at people to involve more into the business side of it is probably what we are seeing. And from our perspective, we're looking at accountants who are trying to use technology to be more value additive to business, more in front facing to the business, rather than trying to, as consultants, it's always easy to give a hindsight wisdom, saying you should have done this, you should have avoided this, etc. But being on the same real-time basis with companies, saying these are the 5 areas. If you make these small changes, you'll probably have more levers unlocked for yourself, right? I think that's the challenge that we are accelerating towards. So my question was more loaded with how should finance personas look at their growth, right? Because if they understand how leaders are looking at it, in some ways it's a clue saying, okay, if my leader is saying this, then I should aspire to try to be going into that role. So that was the lens from which, I was kind of coming from. But at the same time, I also am conscious that there is, moving into the logical next question, I'm also conscious that sometimes technology is overhyped. As much as we are talking about exciting use cases for AI, I think we also agree that it's the messaging out there in the market is probably fairly overhyped in a lot of ways in terms of use cases, especially in the finance world that we can use. Where do you see this spectrum currently today as we speak? And I'm sure 2 months later, if we speak, the answer will be different. But on the spectrum of whether it's an overhyped or whether it's a reality to stay, right? If I were to ask each of you that question, and I don't want to make it very AI driven, new technologies, I would say. AI happens to be one of the new technologies. Let's put it that way. So do you see it's very overhyped in terms of use cases that finance teams can embrace? Or is it still wait and watch kind of a mode? Where do each of you individually lie on the spectrum? Nishit, maybe if you can go first.
See, I think I'll probably give some background before I answer. I think when the startup bubble came in, right, a lot of disruption happened in many spaces. And most of that disruption was technology led, to say that why should something, and it challenged status quo in the way things were working. Let's give an example of fintech, right? We used to have a lot of documentations, we used to sign it, etc. Now KYC has become online.
True.
Fast. We used to take about a few days, sometimes months to get a loan. Now it happens in minutes. So how does one kind of, move along with the technological shifts, which are very critical for us to become more, fast-paced to deal with, the changes. That's the first part of it. So one is how we are using technology to change the way we are doing things. And that's what startup brought into the ecosystem and thing as a mindset. And I think I definitely appreciate that. Now coming to the second phase where we are now looking at AI, and there's a lot of conversations that, the way AI is going to disrupt things, etc. I think while it's yet to be proven in the way, we are talking about it, it's more important to kind of, look at it again from the same lens to say how we can leverage this phase of technology to do the same thing what startups did earlier.
Got it.
But within my, ecosystem, within my own, limited sets of responsibilities which I do in an organization, right? So that's the way I look at it, that, how do I now look at it as a mini startup in leveraging the set of technologies and to the way where I can become more efficient, I can become and drive more insights into the organization, etc. But again, I do not want to still say that this is either a fad or not. It's yet to be proven, is what I feel. There are a lot of talks about it. I still feel that while as finance professionals we are leveraging it. I'm not saying no, but I think it has to be developed, it has to be understood, it has to be looked at from a, and again I'm bringing risk here because a lot of learning which an AI model does today uh, can have a certain level of hallucination.
True.
And if you're looking at it to do your debits, credits, and record to report, there is a risk involved, which one needs to be wary of before you kind of implement it.
True.
But in business decisions, I feel how we can fast track business decisions. So a lot of people today probably take a few hours, few days to come to a business decision. Maybe now it can be driven in minutes.
Got it.
That I think is a definite, area for adoption immediately.
Okay. So in some sense, I could say that there are already use cases which are showing a lot of promise, and there are some which is still wait and watch. You don't want to really take a leap of faith at this juncture.
Right.
Got it. Manish, how has it been for you?
Not very different what he said. I would only say that the way I see it is the debits and credits are here to stay, right? But there are things apart from debit and credit which people do. And I think a lot of these things can help you reduce the amount of time you take to do that. For example, a reconciliation. For example, lot of not the debit credit, but lot other small things which the team has to do. So to me, what happens in an organization which works for so many years and given it's a startup or given a lot of times you have a habit of throwing people versus technology, and you end up having an organization where you have a lot of people doing a lot of things which are important, but those are things where probably some of these systems can work. So today, if you use a right AI tool or a right AI model, you can do reconciliation in matter of seconds versus somebody going through the scores of
transactions,
Excel sheets and doing VLOOKUPs and things like that. Those are things which can come very, very fast. So to me, there are some applications which can actually help us reduce the amount of effort and time which people take in doing that, and hence you can find a lot of time by using some of these applications and help them do things which are beyond that. So today a lot of time goes into doing those things, and hence analyzing those numbers become less. It is the job has become reporting. But if suppose you are taking X number of time in terms of doing that, if that can be crunched to X by 10, then the balance 9 by 10 can be used in understanding the number, how it impacts business, what can they do. So to me, that is something which is real and happening.
Got it.
Because I can see that a lot of work which people used to take, say, a couple of hours, 4 hours, 6 hours to do it. Today you have technologies, if you use it rightly, can actually reduce it a lot and help them do a lot better in terms of what one of my bosses told me, and something which I always tell my people is always smell the number. See, you cannot just report a number. You need to understand the number. That you if there is a number, you should know how many crores, how many lakhs. Does that make sense in the context of the report? Does that number make sense? So you have to smell the number. So to me, a lot of times people don't get that time. They are in such a hurry that they are just publishing a number and done with it and then getting into the next job. To me, a lot of these tools can help you reduce that. And that is where I think finance can really add value, and these tools can really help team to do that. To me, that is one part which I think can really work. So to me, I can see real use case and people are adopting. The biggest challenge I see is the way we are organized in terms of data. Because end of the day, garbage in is garbage out.
True.
So if you don't have the data right, if you don't have the data lakes right, if you don't have the structure right, if you have not done the job there, then nothing works. Then you will use an AI tool, then you will use somebody to just bring all the report together and doing that. That doesn't help. So you really need to structure it right and probably invest a lot in getting some of those sorted. Then you start leveraging it. So to me, that works. Second place which I say on the business side, I would be a little averse of using directly in business decision making. But where I think these tools can help is shortening the time which takes to build some of those use cases, models and things like that. I would still think a lot of time should be spent on the output, understanding, smelling, discussing, debating, and that times would probably AI will not crunch. At least the AI which I understand, and I'm not a big expert, so I would say that will still. But like doing the research, bringing the model, like I've been experimenting with a model like Cloud with Excel. It's such a wonderful model, like a model which you would probably an analyst will take 4 days to build. You put the right command, you put some research report, you put it in a folder, and it just throws a model in a couple of minutes or probably 10 minutes, right? So to me, that time crunches. But then you need to spend a lot of time understanding it, seeing whether the context is right. As you said, there are chances of things will happen. So a lot of some of those work is reducing, and that will help. But you will still need to spend time. So I see these are real things. The technology works, and we need to find the right places to use it. And we need to make sure our data structures are right if you have to use your internal data.
Got it.
Because otherwise it doesn't work.
Yeah, true. So Manish, and so one of the aspects that you brought out very clearly is, so what is the amount of time investment or effort investment that you need to put in to, there is a people's problem to this whole larger problem statement of embracing change. Not necessarily I'm saying AI embracing change. So how much of a time investment are you putting in terms of trying to get people to adapt change, embrace change, look for change rather, right? I'm sure if you have 4 finance folks under you who are constantly looking for options out there in the market and coming to you and saying, Manish, I saw this yesterday. This seems to have a good use case. I saw that yesterday, right? So how much of an investment are you having to put today to have finance people look out for solutions, or even look, not just like vendors, but even technologies per se, right? And where do you think that's headed? Is that getting more and more finance people are jumping onto this change bandwagon, or do you see it more of an effort that you're putting today to get people onto the change bandwagon, mindset wise?
So today I think you have to put in a little extra effort, because today there is a risk perception which is built on it. There are apprehensions which are there. And then the other thing is people are already daunted with a lot of things. So their ability to say, okay, I'm doing X number of things, I'll continue to do those X, and I will also find a solution which in future will reduce my time, doesn't generally come naturally, right? Because you are so undaunted with your work, you are just managing 9 to 9 or 9 to 5 and like getting your job done, and you are done with it, right? You need somebody to bring in and put them or force them and have that discussion.
True.
So today I think it is on the other way where we are pushing. There are folks who are a little more enterprising than others, and they are actually jumping onto it. But as a overall, I would say that today you probably need to push a little bit. And as people start seeing the change, as people start believing, this reduced my work, then the adoption of change becomes faster.
Okay.
So I think it is still at a stage where you need to push a little and make them believe that it will help them. And it is not about, to me, it is not about reducing job. I don't know what will happen in future. I am not an expert. People talk about that AI will take away all jobs. But the way I see it is, it will enhance their job. It will give them a lot more job satisfaction, because today their job is, they're only managing reporting. Tomorrow they will report and they will analyze and they will say whether it works or not. What do they feel about it? Today they don't get that time.
Got it.
So to me, that is something which will really help them get a lot more satisfaction of the job. So to me, and value addition to the business. So I see a lot of value addition which can come in, but you need to push, you need to get that right. And there are things which are working, not working. So you need to go through that phase. It is still not at a place where I will say everything is perfect and it's a plug and play model, buy it and it will work. So that's where it is. Okay. It's always a little more effort when it is in an experimentation stage. Once it gets proven, when it gets wider adoption, people will start adopting a lot faster.
Got it. Nishit, I'm going to put you a bit under the spotlight, or rather under the bus, if you may say so, crudely speaking, right? I think I'll add one more aspect to, based on what Manish is talking, AI taking away jobs, etc. It's around that premise, but a little nuanced. See, I think today one of the things I'm sure you'll agree is the rate of change is very fast, right? That's also unsettling for a lot of us as professionals, right? When we all qualified and we started, whatever regulatory change came, there was a 1 year, 2 year time to react, understand, analyze, study, figure out. People jumped into tax domains based on regulatory changes, etc. So there was a time to react. So that kind of gave people so-called mental mind space to be able to manage change. So when in the digital transformation persona and the controllership persona that you're taking, with this underlying premise that the rate of change is so quick, and there is this hype that technology will take away jobs or AI will take away jobs, I'm sure you must be constantly sensing one underlying current or tension within your large teams that are working with you, working under you, right? How do you manage that on a periodical basis? I'm sure it's a constant effort that you've had to put to get their buy-in for the vision that you're setting for yourself, or as an organization you're setting for yourself. But with the rate of change and with this so-called hype, how do you manage that underlying tension within the room when typically you're introducing change? I'm sure you looked at it a little skeptically. Okay, what is this guy trying to do, right? So how do you manage that in your role?
No, great question. I think this has been the challenge from the day I've taken over transformation, because the people who are going to be driving that transformation, because they are process experts, are the ones who are also afraid that they might lose their job. So it was more a cultural shift before it becomes a technological shift, because people need to first feel secured that and like Manish said, this is only enhancing your productivity rather than taking away your job, right? So I think that's the first part. While I do not deny that there will be certain level of reductions which will happen, but they are only for people who are not able to embrace this level of technology. But if they are able to, I feel that it's more a productivity conversation and not a job conversation, if you ask me. But the largest challenge has been more cultural for me, because you have a set of operational resources who look at a certain SOP and operate under a certain SOP. And now that SOP, when you translate into technology, because that SOP also has been archaic, right?
True.
Today you get an invoice, that invoice needs to be punched into the ERP, and that has a certain format. Most of it, like you used to do in the over years, used to do a GST check. Before that, you used to do a VAT check, and then used to first find out whether this vendor is credible or not. And then now you go to a scenario where all of these checks are automated, done by various APIs. Then you move towards a AI OCR who can read the invoice and key it directly into the ERP. But again, certain things which the OCR does not know. And just an example, right? That this vendor typically does not deposit GST on time. So these are things which come with experience. And these subject matter experts need to understand that, how that can be embraced in technology, so that they can actually build in more such, rules and insights into their muscle memory, because these guys have been doing certain processes for years. You take a name of a vendor or a customer, they would tell you their history, and they are probably better credit checks than what you would put in a system and get. True. Right. So I think you can't take away that. So I just want, and I agree with Manish, that how can technology act as a catalyst for productivity, for faster processing, more accurate processing, drive better experience, because I come from a more controllership standpoint. I'm saying how it drives better experience is how I'm kind of looking at things now.
Okay, got it. If I were to kind of extend that question and ask you both to stick, just look at, probably have a forward view on things. Which are the finance functions, like if you were to broadly split finance functions into FP&A, into bookkeeping, into controllership, into regulatory and compliance, which are the finance functions that you see are most ripe for disruption today the way they are, right? In the next 2 years maybe, right? I know 2 years is also a bit overarching given the rate of change, but maybe in the next 12 to 18 months, which of the functions do you guys see being most ripe for disruption? Not necessarily from your own organizations, but also from what is happening around you, right? As a finance function, what would you say is the two or one or two more most ripe functions which are ripe for disruption in this standpoint, in this context of technology being able to bring in that much more exponential efficiency rather than incremental efficiency?
So I think, I'll probably have a very simple answer to that. Any role which has a very canonical way of working will be ripe for disruption, and there's no perception to add.
Got it.
It's a very rule-based function. I think any such role, and if you have to give you an example, let's say bank reconciliation, right? Today in bank reconciliation, we face a lot of issue because of the way banks also give us their statements.
Information, yeah.
But when banks adapt to the technology and ensure that all the names and fields are properly entered, etc. I feel that in most large scale companies, bank reconciliation probably is one area which can get disrupted. But general rule of speaking, I think any canonical way of working, it's just rule based. There's no any other area that needs to be looked at. No perception, no external
Got it.
factors, internal factors.
No subjectivity per se.
And there is no subjectivity. That actually will get disrupted. But I see very few. If you ask me, BRS was one example which I could
Off
take
the rack,
over.
yeah.
Off the rack, and any regular basic MIS maybe. But anything which has insights, etc., I don't think so will get disrupted.
Okay. Manish, how is it?
Similar, I don't think it's very different. Like functions like O2C, order to cash, the whole reconciliation, you get reams of data, and yeah, today you use some VLOOKUP, some process, and something like that. But these are things which probably will work very, very fast. So you will still need people who do probably different things in terms of which bank works it better, where you can get T+1 or T-0, where you get something like So people will move to different things, but some of these processes are vendor reconciliation. Like say a BigBasket, we would buy from thousands of vendors and we pay, and there are promos, there are claims, there are a lot of things. Today, it has to be managed. Somebody has to look at those numbers, somebody sit with them, vendor reconciliation. Those are things which probably AI can do it faster. So the job of that person would, today the job is mostly fetching out a report, explaining them, understanding them, doing a reconciliation with the vendor. Tomorrow it will be probably, if the data works out well, it will be okay, these are the point of differences and this is why we are not paying, or this is why we need you. And so to me, those value addition will come. So they will probably need to do different things based on those reconciliation which the system will do. So some of those things will work out in terms of which are more mechanical. Subjectivity is there, but today they are not able to use it because that most of their time is going into just getting to the numbers. And this disruption will probably take them to the next level where say, okay, then getting to the number somebody else's machine can do, and they can take it from there and help the business there. So those kinds of jobs should get enhanced with this, is how I would put it.
Got it. And if you have to logically look at this, and if I were a young, I'm not young, I know, but if I were a young finance professional walking into a corporate role, right? And if I were going to have an interview with you, right? What would be those one or two aspects that you look at them for, critically speaking, right? So, whether it's mindset, attitude, skill, etc. Broad would be that one or two critical mindsets which will pivot you to making you believe that this guy is the right guy or this girl is the right girl for our organization. In today's context, how would you look at it for a young finance professional walking into joining your team?
Sure. So my criteria has been very simple, and I think Amazon had a lot to do with in terms of how Amazon interviews people. So I look for 3-4 things. And I'll go back to Amazon principles. So to me, ownership is something which is very, very important. If somebody, and like, I don't know, but like I used to read CBSE, I was an CBSE student. So like in our all NCRT book, there was in the first page, there used to be a quote that at any time in life you have a problem, it was by Mahatma Gandhi, that any time in life you have a problem, think about the poorest person and think about whether whatever decision you are taking will help him or not. So to me, that quote has resembled to me. I see it as whenever I want to interview somebody, I won't want them person to think about them as the owner of the business and whatever life situation they have acted or worked on, and are they showing trait that they don't need rules, but they act like an owner. To me, that is very, very important for me. To me, everything else can get managed. But if you come with an employee mindset versus if you come with an owner mindset, like always going back to, if I was the owner, if ये मेरे पापा की दुकान होती तो मैं क्या करता?
True.
And to me, most 99% of time that decision will be right. So to me, I look at that as very, very critical. To me, that is very important. That there. Second, I look at is trying to understand how people make judgment. And in Amazon, we used to call this as a principle called is right a lot. So the idea was, what are the judgment decision the person has ever taken in life, and how did they arrive at that judgment? More of the process of thinking and what happened after that.
Got it.
To me, that gives me a very good perspective of how the person thinks and how the person was able to take a judgment. small, big, doesn't matter, because if I'm talking to a fresher, they would not have taken a lot of judgment. They would still taken a lot of judgment in their personal life, right? So to me, that is very important, as how at any point of time the person took a judgment, what they considered, what happened, did they went into hindsight to think about it. To me, that process of how somebody does is very important for me. Ownership is very important for me. So to me, these are some of the things which I look at, and as long as I get comfort that that is something which I feel I am comfortable with, it works a lot for me.
Got it. Nishit, so what is it that, yeah, please. What is it for you?
I think very similar, Kaushik. I think ownership and decision making is very important outside of the intent, etc. One more thing I kind of look out in my interviews is intuition, the way how intuitive that other person is when ask for a certain business case, etc., and how their intuitions kind of play along into their decision making. And I think I've always been someone who has had a mindset for automation and technological adoption. So I also look out for that, irrespective of it's in a business role or in a finance role. But I think that's very important and critical to me, because if that's not been put in, then I'll have another person who will have ownership, good decision making, but will throw people at the problem rather than technology.
Got it. And I mean, beautifully you blended that actually, because for us, this is the term that was coined in the tech world in the last year called forward deployed engineers, right? Talking about engineers who are AI, native, who use AI as a embedded part of their things. So there's also something that, is coming about in terms of why not forward deployed accountants, right? Accountants who typically understand natively how to use technology, right? Have a very good basic understanding and principles of how technological frameworks work. And coming with that as a skill set to an interview, saying, how can I throw that resource, or how can I bring that mindset to the problem that I'm solving for? Not everything can be solved only with that, but having that as a layer in your mind constantly. Okay, what can I do better? What can I do with this data? What can I do with this process? Where can I plug? How can I convert that process into a technological outcome per se, right? So having a constant brush with technology and using that as a buddy to be able to evolve your outcomes, right, is what we are now looking at as that term. So there's a term that we started coining, saying forward deployed accountants, right? And in our own organization, we are seeing not only accountants who code, but even accountants who are right now looking at processes, how Claude is helping them to get over things faster, how OpenAI is giving better narratives, how Gemini is giving better creative suggestions as of now, and each model keeps changing its strength depending on the releases every 1 month or every 1 week per se, right? So I think that sense of resourcefulness, of constantly being aware of what's happening in the market, and also bringing that into real life in terms of saying, okay, how is that going to help me today? Not trying to be overarching like a prophet saying, this will do this in 2 years, this will do this in 1 year. What can I do with it today? How can I help solve for the problem today? And I think that hunger and that sense of technology is what we are seeing as a great inflection point, especially with the 22, 23, 24-year-olds who are coming into the corporate world in, freshly qualified or, coming from an MBA. We are seeing them having more of these kind of skill sets that are coming together. So that's one of the reasons as to why I kind of, was curious to understand how you are looking at talent coming in and what kind of talent is walking in and knocking the doors of your organization. So I was asking more from that.
I think I'll just add to what you're saying, right? And you just go back in time, at least for all of us. We've done our CA.
Yes.
We've done articleship. So I first of all feel that most of us are not freshly qualified, but we are 3-year experienced.
True. Yes.
Second, before we used to go to any audit, the first question was always about what is your business about. While we were looked at gatekeepers, we were looked at people who call out risk, etc. But we were always business aware. I think that business aware was probably somewhere in the subconscious. The way we used to work probably has changed. And I think therefore I love the term forward, what is the term?
Forward deployed accountants.
Forward deployed accountants. And the reason I love that term is because once you change the mindset with which these accountants can get deployed, is going to add a lot of value to any business, because these are people who understand numbers.
True.
These are people who understand business. And now these are people who understand technology. Imagine the amount of disruption.
Value addition, yes.
And value addition, this particular set of team can add is something which we need to see. I think there's a lot which can be done.
Yes.
It's about how mindset is being changed and how we can shape it as leaders, if you ask me.
Got it.
So at Amazon, we used to have a term, and we used to have a team, which was like product team for finance.
Okay.
So that was this team.
Got it.
Right. So their job was to think about all the processes which we have and how do you productize it.
Yeah,
right.
understood.
How do you help them? And we actually had a global tech team also supporting them. So to me, I that works. I'm saying it's not like, yes, maybe there was no AI, but there was still scope to productize
true.
things.
Yeah.
So, and it's a very good team, and I think that team really helped a lot of Amazon functions do much better because it was centralized function.
Got it.
So I have a vision that probably every finance function should have a product team,
Yes.
which should help, and that's nothing different from what you are talking
True,
about. Right?
true. I'll probably then come to the last part of the segment, which is just a quick fire, rapid fire. It's some little funny questions also, so it doesn't have to be so serious and candid per se. So I'll probably just take turns and then shoot those questions, and we can close out this episode that way.
Sure.
So Nishit, I'll go with you. Excel or AI copilots?
AI copilot.
Very easy when I'm
Very easy
starting.
one.
Okay.
Thank you.
Manish, for you, one metric you check every morning.
Yesterday's sales.
Okay. Nishit, to you, best piece of advice you ever received from a mentor?
I think ownership. How do you look at business as owners, and how approachable you are to anyone, irrespective of their levels.
Okay. Manish, to you, one mindset that helped you succeed in high growth companies?
This one which I talked about, that nobody wakes up in the morning to think about bad for the business. You just need to understand their perspective.
Okay, great. One prediction about finance teams that will surprise people, Nishit, to you. Given
Sorry,
that
come again?
one prediction about finance teams that will surprise people.
Prediction.
That speculative, I know, but go for it. Give it
I
a
think
shot.
what you said, forward deployed accountants.
Okay, you're jumping on my bandwagon.
Oh yeah, I think I'm going to use this term very often now.
So, Manish, one thing founders always say that makes finance teams nervous. It doesn't have to be something sensitive. It can be something funny also.
Need more capital.
Maybe something like, see, what makes me nervous is at times if people say that we will start this tomorrow.
Okay.
So you need to think through it and work it out. So that is something which I at times feel that you don't get enough time to check the decision right. Sorry,
Got
it's
it.
not a rapid fire answer.
No, that's fine. So some of them are meant to put you in a bit of a spot, so it's fine. So Nishit, to you, I'm sure you worked with many finance leaders, and so one quality according to you that separates great finance leaders from good ones.
I think finance leaders who understand business and are true co-pilots and owners of the business are the ones who are, distinct as compared to, traditional finance guys.
Okay.
I'll probably answer this.
Please.
To me, the difference is how good you are a storyteller.
Okay.
So that is what I have seen, that if you are a good storyteller, you make a lot of difference.
Okay.
Yeah, to what he said, right? How that story added with the way you smell numbers. I think smelling numbers
Smelling
the right
and
way.
stories are seemed.
I feel smelling still a lot of people do, but telling the story, and especially finance, because we have been trained to be less communicative, right?
True.
Our courses was a lot more theory than practical.
True.
We didn't went to a class. We didn't do live projects like an MBA student and things like that.
Exposure
So
also.
our ability to talk stories
Articulate.
is less.
We didn't do
And to me,
sales.
that is something which really matters a lot, because in the real world, if you are a good storyteller, and you need not be a very good communication, you can write a story.
Yes.
So, and that's what Amazon teaches you, that you can take away
True.
that bias of confidence of
True.
standing in front of people, but you can write. But how good you are a storyteller really makes a difference.
Got it. So Manish, I know I asked you a metric question. I'll ask you the flip of that. One metric that you think people obsess over which really don't need to.
The same.
I guess it's again the same sales.
I agree with him.
I'll give you an anecdote as well. And sorry if even in a rapid fire, I'm saying like levers. Again, I've been trained at levers. Every day we will look at sales number and things like that. And I joined Amazon. Amazon have this concept of every Tuesday they would do a WBR, which is like a weekly business review. It will be like a 100-page document. All the business leaders will come, and like when I joined in, my boss said like, you go and sit in WBR for a couple of weeks, you'll understand things. So I spent couple of WBR. To my surprise, there was never a sales 2-hour WBR where every metric would get discussed threadbare and there was no sales discussion. I was like, ऐसे कैसे हो सकता है, मतलब कि
धंधा कैसे चला सकते हैं?
बिजनेस डिस्कस कर रहे, ये तो बात ही नहीं किया कल कितना बेचा, right? And then I went back to my boss and I said like, boss, मतलब while everything is good and it's great that we have so much data and we discuss, but sales discuss नहीं करते हैं. And then he told me this and I it has still remained like inputs versus output. He said like, यार सेल नहीं हुआ, देयर आर 1000 स्टोरीज कि सीजन खराब हो गया, बरसात ज्यादा आ गई, बरसात कम हो गई, यू नो 50. बट यू टॉक इनपुट ना कि आपका सिलेक्शन बढ़ा कि नहीं बढ़ा. देयर कैन नॉट बी अ स्टोरी देयर. If your selection was X last week and it has to be Y, has it increased or not? So Amazon works on 3: selection, pricing, convenience. So your pricing was compared to your competitor X versus Y versus Z.
Got it.
So you cannot tell story. So and the idea is if you are input right, customer झक मार के आएगा. Right?
True.
So that to me was a big change, and that's what Amazon kind of worked out. But sales is still a number you look at.
Got it. So it is a metric that you check, but it's an overlooked at metric also is what you're saying. In some sense.
Because you probably need to focus a lot more on
more.
why it happened and what are the inputs, and making
Got it.
sure inputs are right. Sales will happen.
Understood. So if I were to ask one concluding question to both of you saying, today, what would be that one word your team would use to describe you as a finance leader? You can take a bit of time to think about it and come back, but one word is all that I want. That's the challenge in this question.
Business aware is what I would say.
Great. Nishit?
Transformation and partnership oriented.
Great. So with that, we kind of come to a conclusion. Thanks a lot for your time.
Thank you.
I know amidst your busy schedules, coming here for an hour and a half and spending time with us, we genuinely really appreciate it. So thanks a lot for making that time for us. And I'm sure our paths will keep crossing at some point in time with the other. The only idea here is to try to evoke curiosity with finance professionals. Finance is not as boring as it seems to be. We are, I think, as accountants, we are trained to be business aware. And that business aware as a context really adds tremendous potential to finance people, like you rightly said, right? We can add genuinely a lot of value to business per se. So I think that's the whole idea and tenor that we'd want to carry this episode. So thanks for your time and thanks for your
Thank you,
insights.
and hope the
Thank you.
listeners find it useful.
Definitely.
Yeah, thanks everyone.